Hey, welcome back, everybody. So, this is going to be the watch list for Monday, April 14th. And let's go ahead and start with some of the economic news. Now, Monday, we don't really have anything dropping from a newsworthy perspective other than a couple of Fed governors speaking. So, good news is that's pretty much before the market opens. So, I'm not anticipating that we're going to have any repercussions based on that. Now, I will tell you that last night on Friday late, the administration has removed tariffs on the chip sector as well as electronics and iPhones and computers. So those have now been a carve out that is quote unquote temporary until they see how China responds. So is it an olive branch? Maybe. But I would definitely expect that you're going to see some of the chips and cell phone, i.e. Apple, Microsoft, probably NVDA, AMD, rip higher on the open on Monday. So keep an eye on that. Tuesday, we have import prices. Probably not too much news is going to go on there. I mean, really, the tariffs haven't been in effect for more than, 48 hours now? So you're not going to see that in the overall, clearly, March data, right? So we'll see how that plays out. Then we have the Empire State Manufacturing Survey. So is manufacturing in the United States improving or declining? Wednesday, we have retail sales. So what we're going to want to watch there is the consumer starting to spend less and then save more? So those will definitely be some numbers that you're going to want to keep an eye on, as well as business inventories. So clearly, if the consumer's not buying, what's happening to business inventories? They are building. We're also going to look at the home builder confidence index, really seeing where do they see things coming into play. So we do have a 25% tariff on Mexico as well as on Canada. And the majority of all of our lumber in the United States, at least 70% of it, is imported from Canada. So we're going to want to hear what the home builders have to say about pricing. So are existing homes even moving? Are they starting to build up more inventory? Now, when you look at the 30-year fixed rate mortgage, because the overall bond yields have been going up, mortgage rates are going up as well. And then when you have mortgage rates rising, tariffs being implemented on lumber, and then the consumer not sure where in the heck we're headed, you might see the overall home builder slowing down. Thursday, jobless claims. Now, the good news is the overall inflation data from last week came in way lower than expected, and jobs came in strong. So we do want to see that the job market is remaining healthy. And then again, back to the home builders with housing starts, building permits. Are they starting to slow things down? That will be one to definitely keep your eye on. I don't know that you really want to short the home builders. They've come down so far from their all-time highs that this one might be a buy the bounce once we get a little more clearer guidance on overall tariffs and then removing those tariffs from Canada. And then Friday, just San Francisco Fed President Mary Daly is going to speak. So whenever we have the Fed speak, it gets a little dicey, but nothing that's really going to move the markets like tariffs on and tariffs off. Tariffs on, tariffs higher, tariffs lower, tariffs in, tariffs out. I mean, just this back and forth seesaw. So let me tell you how I've been trading the market a little bit differently over the past week. What I've been doing is watching my ES, which is my SPY futures, my NQ, which is my QQQ futures, and my overall VIX. Now, I am watching these on a separate screen on a 5-minute time frame looking for a higher trend, because what's been happening in the market is we are up, we are down, we are up, we are down. We're all over the place until we can catch a trend. Now, lately, we've been catching a trend around 2 hours into the market open. Okay, so what I've been doing a little bit differently, and let me show you on a different screen, and we're going to go ahead and we're just going to start with ES, the SPY futures. What I've been doing is I have been watching where is the pre-market low, the pre-market high, prior day high, prior day low. Now that's something I would normally never do when I'm charting SPY or QQQ. It's not been needed in the past, and the daily 4-hour and 1-hour timelines have held so much better. But if you look back here on Monday, the 7th, where we had a daily high, and then we come into Tuesday, that's pretty much where we pushed up to. And then when we go to Wednesday, once we were able to surpass that, we have been moving up here to where we were on the previous midday low. So a couple of things that the market has been doing, and let me show you on this, and this is something that's been more of a pattern, which has been interesting. So the market has its pre-market low. I don't use anything after hours. I really want the sentiment from the morning of, so I'm using what's in the futures after the midnight deadline for Pacific Standard Time for me. And I'm watching to see if they're going to break the pre-market low with the futures. When they do, they're pushing it down and then they are moving it back higher to this pre-market low. But once they start to flush it, it's been dropping precipitously. Now, you will also note that where is it dropping all the way through? These prior highs back here to the left. So now let's fast forward and go to overall Friday. So you'll see this was my pre-market low, which is what I used right here, which was about 1:45 Pacific Standard Time in the morning. But this was interesting in that they were actually opening the market, pushing down to the level, coming up, pushing back down to the level before they rocketed it higher. Now let's go back and take a look at, well, where were these other pivots from that they were rejecting? It was the morning intraday low before they pushed it back up from Thursday or the day before, okay? And then where are they failing it? They're failing it again from these prior pivots. So I've been doing more on the 15-minute time frame with the futures to say, where's my pre-market high, my pre-market low, where's yesterday's high, and where's yesterday's low? And it seems to be abiding by those a lot better than overly the daily 4-hour and 1-hour time frame. Now, you'll also be able to see that on NQ. So when we're going to actually take a look at the QQQ futures, you'll see again, I have a pre-market low on the futures for NQ. And again, I'm only watching this on the 5-minute. And then what are they doing? They are pushing it up to the prior overall pre-market low from the day before. And then here's another example of a pivot. They push it down, they push it up, but once then they fail it, it's dropping significantly lower. Now, it's not getting to a longer-term price level that I have on a daily 4-hour or 1-hour because they're reversing the market higher. So they're using liquidity zones right now with pre-market low and pre-market high. And then again, you can watch the prior day high, prior day low, and use that and start charting those out and keeping an eye on those separately. Now, I'm also watching the longer term on this for a bullish pattern or a bearish pattern. And this has been playing out pretty well on the futures on a 5-minute time frame, where when the 9 is holding above the 21, it is just moving level to level to level to the upside. Now, mind you, I am still watching my overall price levels in SPY, QQQ, and the VIX on a 1-minute time frame because I am taking my entries on the 1 minute. I can't wait 5 minutes to get into the trade because 5 minutes later, it already went without you. But what it should be able to do is give you a greater degree of confidence if your level is going to hold on your individual charts. So whether you're going to be trading SPY, QQQ, you're going to be trading Apple, Google, Meta, Microsoft, any individual names, it will be the same thing. Now, SPY is clearly, and QQQ is clearly holding the price levels that I have on the higher duration, right? The daily 4-hour and 1-hour. But we are not getting that exact same movement on the futures. So the futures is actually using pre-market high, pre-market low, intraday high, intraday low, and then it's moving accordingly. So do keep an eye on that, something that I've noticed really came into play over this past week. Now, I'm going to take a look at a couple of names. We're going to go ahead and start with Tesla. Tesla is in this band where you've been pretty much able to trade it all the time, right? 249 and 251. We get below this lower band and it pushes down. It uses it as resistance. It'll push down again. We come through it. It'll use it as support and we can push higher. Now, I don't like it when the market is trading right around the band. But what this is telling you is that the buyers and sellers in this area are pretty much in agreement on price, right? I mean, we're in this narrow box here. So I would wait to take a trade once you get out of the box to the upside or to the downside, but you can clearly see how it's respecting this channel, which isn't that wide. 245 to 255, $10 on Tesla, is not a lot to work with. But once we can hold this level, I definitely think we're going higher. Clearly, you'll see when we break the level, like we did here, it goes lower. Like we did here, it goes lower. We held it here, it went higher, we break it, it's going lower. Here we held it up, here they were able to hold it up, here they held it up, okay? So keep an eye on this one. I really like this range that should be fairly tradable. Now, the other thing that I've been noting too is we are not getting back to the higher time frame levels, daily, 4 hour, 1 hour. So what I would always do is start looking left just from the prior day before and start to look for, well, where is the market starting to actually find somewhat of a semblance of a bottom, right? And then use a 5-minute time frame or a 15-minute time frame to kind of mark that, because they're not pushing it all the way down. There's so much volatility with the up and down and up and down and up and down. You're going to have to look for some lower levels on the time frame, like a 15-minute, where you can actually catch the move in the opposite direction. Same thing kind of here on Apple, right? I have my higher time frames, daily, 4 hour, 1 hour, all in yellow. But then what I noticed is this week that the pre-market low on Monday from a week ago was kind of holding this area of 177. So we're not getting down to 168. We're not moving up to 187. We got a very, very wide range. You'll note that I really, can't even go back that far on a 15-minute chart. And then if I look here, right, we could go ahead and we could pick up some levels where it's been rejecting, where we rejected here. Just line that up on a 1 hour time frame. And then what you're going to want to watch is, because normally we're not going all the way back here to 2022, right? I mean, that's like super far back, but we rejected it, support, support, support. And then we get into the current week and it's kind of doing the exact same thing. So at the end of the week, go back if you're going to use an interim level like I just did, and then see if it'll trace all the way to the backside. Now here, right, it just kind of gets messy. And this is because of volatility. So it's really hard, to be trying to find price levels in here. Like, where do I even find a price level? I don't know. I mean, should it go right at this wick high, which is what I would probably do, and I would make it a blue line and kind of observe that, right? But when you're trying to figure it out is, well, where are my 4 or 5 touch points? I mean, we're here, we're down here, we're kind of here. So just throw where you're seeing it come up in the middle of the week between levels, use that for the next 3 or 4 days, okay? And then watch how it's trading around that, and then you can go from there. Now, we do have a gap above for Apple, which most likely, if we get the good news on tariffs, which have already been out, market's not open, should definitely be pushing higher. But now, look at this nonsense. This you should not be trading. That's why I say I would just rather be patient for a daily 4 hour, 1 hour timeline where you can go ahead and take a trade. Now, if Apple pushes lower, what are some other price levels you're going to want to be cognizant of? Well, you best be cognizant, probably right about here. And what you're not going to want to do is when you break the price level, you're not going to want to go short on the yellow line of 187. You probably need it to drop below 185, right? And then make sure you can clear right here 183. And then if you can clear 183, then you probably have room all the way down here to 176. But this is like a liquidity sweep where they're coming right below. So as soon as you're watching it come below, retest, and you go short, the market is just buying it up. And where is it buying it up off of? That's why I want you to be watching these levels on the futures. So I have a whole separate screen that has nothing other than the futures and the VIX, okay? I'm not going to try to keep flipping back and forth like this between SPY, futures, Apple, Amazon, Google. Go to Best Buy, spend $200, get yourself a separate monitor. It is worth the investment, okay? So that's Apple. Let's go ahead and take a look at Amazon. Amazon is going to be heavily impacted by the tariffs, right? But these are my, again, higher time frames. My lower ones are going to be in the blue. And I was doing that literally here on Thursday to watch and see what is going to happen with Amazon. Was it going to be able to, again, respect this pivot from Thursday where it fell below? We touched a price level of 176. So again, price levels on the individual stocks on daily, 4 hour, and 1 hour are working really well. They're just not working as well on the futures. Now, mind you, we had the exact same thing where I have, again, a pivot low here that they were using as resistance, and now we're using it as resistance. But this is just from, the 31st, right? This is only a couple of weeks old. So start to look at that where you're between higher time frames. Can I put an interim one in there that makes sense? And it's not necessarily for you to trade off of firmly, because again, it's a very low time frame, but at least be aware of it. Should be a price target, should be an entry or an exit, or maybe where the market is going to reverse. So these are my price levels for overall Amazon, and that's been trading really well. Let's go ahead and take a look at Google. Google, all I had up here was an interim level off of this candle wick high from Wednesday, right? And then they observed that the following Wednesday, right? They pushed it all the way back up to here. I was between my price levels. I just said on a 15-minute, I'm going to want to keep an eye on that. Sure enough, though, look at how these price levels are holding really nice all the way back up to the upside, okay? Let's take a look at Meta really fast here. Same exact thing. All of my yellow price levels, hard and fast. I like them all. No issues. But what I started noticing here on Meta, this was about a week ago, right? Back here on the 18th, actually is a month ago. Look at how they keep coming right below the level and then buying it up. So again, I threw an interim price level on a 15-minute time frame to say, why do they keep doing this liquidity sweep where people are going to want to go short and then you get in puts and then you're screwed, right? So we want to watch this and look at what they did right here on Friday. They brought it right back down to this level on the close. Then the next morning or overnight, they pushed it lower and then they were able to regain it to move it higher back to my, again, regular price levels, my 589. So when we have a lot of volatility like this and we keep getting these quick reversals, just take some time on a 15-minute and say, over the last 2 weeks, did something look a little screwy? And is there something that I can just add a level of degree of confidence to know, hey, if we break below 580, I probably don't want to be going in puts. Or if I do go in puts, I got to be ready with a very quick stop loss to trail into profits because they bounce it, right? They bounce it here, they're bouncing it here, and then they finally fail it. So once they are failing this interim liquidity level, we are then pushing down to the next level. Let's take a look at NVDA. That should get a fair amount of conversation this week, especially with tariffs. Same exact thing. You'll note here that I had, again, an interim level where I'm like, this is odd. They're kind of stopping it midway through, right? Now I could, see, do we want to go all the way back here to the left? No, because we don't catch here. Maybe we catch somewhere else. So this is an area I want to be aware of. And they're using it as resistance. Then they literally wicked it down for support, and off we went on Thursday and into Friday. And then again, back to my standard price levels, my 107, my 109, my 114, so on and so forth. So do work with that. Try working with more of the futures data only on a 5-minute, not on a 1-minute time frame, okay? And then use the futures data as your confluence for your target levels in SPY, QQQ, and VIX. And then also, I implore you, get this supply and demand indicator. We have taken so many freaking winning trades off of we're getting ready to get into the trade and we're waiting for confirmation. Then all of a sudden, demand is forming on a daily, demand is forming on a weekly. 90% of the time when that demand is forming and we catch it either on the index itself, the ETF, or we catch it on the futures, that has been a 90% winning trade every single freaking time. Okay? This is $45 a month. Spend the $45. You will make such better decisions and you will have greater visibility than just price levels. So hopefully that helps everybody. I am out next week on vacation. First thing in the morning, I'm on a 6 a.m. flight to Puerto Vallarta, and I'll probably do some maybe personal trading from there, but I will not be on live as I just want to enjoy a little bit of downtime and some early morning sunrises, some coffees, and some breakfasts. But with that, I'll update everything in the Discord with my price levels every single morning, so you should have those. And then watch for the live trading link, which will be done by Gus and Anthony. So with that, everybody, have a phenomenal week. Be patient. Don't get caught up in what I like to call this is the fuckery. Stay away from this. Let a trend develop. Wait for a price level. Watch your EMAs, and you'll do just fine. So with that, everybody, have a great week, and I'll talk to you when I get back. Take care.